Welcome back to the Blacksmith podcast, and it is time for part 4, not for foe. Okay, so that's Vladimir Tenev. By now, if you're watching these videos in sequential order, you already know that's co-founder and CEO Vladimir Tenev on the left, and that is the CFO, the Chief Financial Officer, the money guy, Jason Warnick on the left. I'm sorry, on the right, and we have heard from Vlad, we've heard from Jason, and 2 questions in part 2, and then we heard 3 questions in part 3. We're going to get to some more questions. So we're on question number 6 right now in this video. I've started putting chapters in here so it's easier for y'all to follow along. Tell me how that's working in the comments. And listen, as you watch these parts of the video, don't just watch them. Give me your honest opinion. What are you most excited about with Robinhood? Or what scares you with Robinhood? What did you think was interesting? What didn't you know? All right. Now, without further ado, let's get it. Wait, hold on. Got to turn my speaker on. Here we go.
Now let's take a question from one of our finance content creators, Amit from Amit is Investing.
All right.
Vlad, Jason.
Finance content creator. Good to see you.
Congrats on a great quarter and congrats on innovating on the live.
I can't wait to get invited to one of these.
Currently, right now, you guys have about 3.5 million gold subscribers, which seems to be the least cyclical part of the business because it's reoccurring SaaS revenues on that yearly subscription. More broadly, how are you guys thinking of protecting the business from cyclicality in the face of market volatility, rate cuts leading to a loss of net interest income, and anything else that could keep that type of growth going as sustainable as possible, given one of the biggest criticisms I've heard is that Robinhood is a very cyclical business?
Yeah, I mean, first of all, compared to just a few years ago, Amit, we're far more diversified. If you take just even the crypto business, that's diversified. We launched a number of products. Staking in the U.S. is now taking off. Tokenization of U.S. equities in international locations. But that what we're seeing in crypto is happening across our business. And you've heard me say that we have 9 businesses with over $100 million of revenue, and we have a number of businesses that have a lot of momentum towards being the 10th and beyond. The other thing that I would say about kind of in the topic of like protecting your business against cyclical movements, really 2 things. The first is that the way we manage our business, we talk about being lean and disciplined, positions us in a place where when cyclicality hits, we aren't like some companies that really have to pull big on levers because all along we've been disciplined. And you saw that we grew revenues 45% year over year, and adjusted OPEX plus SBC was up 6%. And so it's really kind of shining through, and I think it positions us in a position of strength should those kinds of situations happen.
Let me stop him right there. So you guys can follow along. So you might have seen me with my phone. I'm used to using cyclical a different way, like in talking about air traffic control when I was deployed out to sea. When we would say cyclical ops, we mean ops that are running through the night, like almost like 24-hour operations is how we would use it, right? But he's talking about a cyclical business. And that is, I looked it up, that's what I was doing with the phone. A business whose performance is strongly influenced by the overall business cycle. These businesses tend to thrive during economic expansions or growth, right? Economic booms, and struggle during recessions or downturns. This is because their products or services are often non-essential, meaning demand fluctuates with economic conditions. And what Jason is getting at, this is actually very intuitive. I understand why that guy is running a financial podcast or whatever he's doing, because that was a very good question, to say the least. What Jason is talking about is that they've built their business model to not struggle during downturn. They're bringing in more customers, and I was trying to get the gist of what cyclical business was, so I kind of missed what he was saying. But the gist of what he was saying was that their business has been shored up against falling during downturn economic conditions.
The other thing that I would say is I would caution us from not overreacting to those situations. The market opportunity and the TAM that we talked about in this venue back in December is massive. We have a massive TAM ahead of us, and I wouldn't want to over rotate in a moment of cyclicality when the market opportunity in front of us is so big.
Yeah, and I would just add that, I think that
I like he said that, because what Jason just said, you can tell why he's the money man. Jason basically just said, hey, downturns in society are going to happen. There'll be fat years, there'll be famine years. We can't stop that. So if you already know that, don't jump out the window and sell all your shares of Robinhood. Continue to invest in our company, because you cannot help that the market or the economy is going to have bad times. That's what he just said. And be that as it may, they're way more shored up. Listen, they're a trading platform, right? That's what they started as, right? Then they got a I'm not going 100% in order here, but they became a lender by giving you a gold card, a credit card. They also are moving into the banking sector, right? With checking and savings accounts. They're going to deliver mortgages, car loans, things of that nature. They let you move your IRAs over to Robinhood. They let you start IRAs on Robinhood. They're about to allow you to do custodial accounts on Robinhood. They are shored up against a recession, or if COVID hits again and people can't go outside. Their product isn't Versace on the floor, right? Their product isn't like a luxury brand. They are marketing to the common man, allowing you to invest in private businesses. Something that I just keep saying, this is so powerful. Y'all don't even realize you're going to have a lot of common men end up being not overnight, but virtually overnight 100,000aires with their net worth. And it's going to come from their stock portfolios, just like the crypto boom. Now, if you missed the crypto boom, look into my eyes. If you missed the crypto boom, when they open the doors to allow us to invest in private companies, you better be first in line. Because if you miss the crypto boom and you miss this, there's really no coming back for you. AI, the dude that knows how to program and give AI their prompts is going to take over 10 to 100 jobs. One dude, right? Where's your net worth going to come from? Where's your wealth going to come from? Where is your passive income going to come from? You better pay attention to this. This is fantastic information.
was a legitimate criticism of the business in 2021 when we went public. I mean, it was just a retail boom driven by multiple things, including zero interest rates. We've been able to diversify our business in a high rate environment, and we've been talking about the natural hedge of, like, as rates go up, interest income goes up, but transaction revenue goes down. So we've been able to drive these results in what's been historically still a pretty high rate environment. And 9 business lines with 100 million or more in annual revenue, and we've got some that are on deck in kind of like the 50 million range. And there's a whole bunch more little seeds that we've either just launched or are going to launch in the future. So in 2021, when we went public.
All right, let me tell you what, let me break that down in Blacksmith speak. Basically what Vlad just said is 2021, when they launched, they received some criticism. 2021 was not the worst of conditions, but what he's saying is that they still excelled in those conditions.
It felt to me like we were much more fragile than today. I mean, product velocity was a little bit gummed up with all the work that we did to deliver for that scale that we saw during COVID. But now, the roadmap, if you look at things that we expect to deliver in the short term, medium term, and long term initiatives, is pretty packed. So this is probably the least diversified you should ever see Robinhood.
See, you see how he finished that question? He finished that question. He put some stank on it, right? He basically said, if we were coming out of COVID and and that was a terrible condition, and we were fragile then, and we excelled then, oh, imagine what we're going to do now that we're offering all these things that I just named like 2 or 3 minutes ago that I'm not going to go back to. But that's what he just said. Don't worry about cyclical and Robinhood. That's not a thing.
All right. Next question from Gautam Chigani from Bernstein.
Spoke about the tokenization opportunity in Europe. Obviously, there's a regulatory path in the US to make tokenization, particularly equity tokenization, relevant for US. How do you see that playing out when it comes to regulatory approval for equity tokenization, particularly in view of the comments that came from the SEC post your event?
Yeah. So I think that tokenization in the US is interesting. If you think about the relative delta between the tokenized equities experience and untokenized, which we've already built to scale here in this market, you get 24/7 versus 24/5. You get some access to self-custody and all the benefits of on-chain, which could mean things like collateralized lending and borrowing, which are a nice benefit, but we already have industry-leading margin rates. And then you have sort of like the cost aspects. Obviously, if more and more of the infrastructure goes from centralized legacy counterparties to blockchain, where it's essentially public infrastructure, the cost of operating the business would go down, which would accrue eventually to customers in the form of more value. So I think that the opportunity, there are benefits, but we're already offering customers very, very close to sort of like what they would get in the US. Overseas, a lot of customers don't even have access to US equities. So we think that we're going from zero to a great experience that we can scale globally to not just hundreds of millions, but potentially billions in addressable market over the coming years as it gets more widespread.
All right. Before he continues, these guys are not gruesome twosome. I don't know what the antithesis of that is, but there's nothing about what he's saying that's gruesome. But here's the thing. The guy who asked the question, he asked about tokenization in the US. What Vlad is saying, yeah, we said that in Europe, and we're offering that in Europe because Europe, a lot of those countries do not even have access to American equities. So they can't access American companies. And I will tell you, sure, I was a chief. Yeah, this was 22. So this was 3 years ago. Heck, even 2013 and 14, I went on my first deployment. I was a E5. I went all over. I went to a lot of countries, but I went to some Asian countries. So I went to Philippines and Singapore. And then I went all over the Middle East. Same thing when I deployed. I went to Hong Kong in 15, my second deployment. And then I went to Bahrain. You can't even access Facebook in some of those countries. You can't access some of those social media apps. You can't access some of those like Binance. We couldn't access here, but overseas you can access it. Some of those crypto platforms, not available. One of my buddies was in Hawaii and he could not access certain crypto. So when it was booming and I was telling him to buy it and he could have gotten in, he couldn't access it. So that's what Vlad is talking about. And he said in America, they've gotten pretty darn close to offering what they're trying to offer them over there. So basically, we are getting a better deal. And this tokenization, it basically says, because I didn't know what this was, refers to the process of replacing sensitive data with unique, non-sensitive identifiers. I don't really understand tokenization. I'm not going to lie to y'all. If I don't know, I don't know. We look it up. We get smart together. Um, Basically, what it's saying is sensitive data replacement, security enhancement, data integrity, and the use cases, payment processes, healthcare, blockchain. He mentioned that API security. So tokenization. If you want to know more, just look it up. I may do another video on it. I wanted him to get to another question, but that's just what I'm gonna share with y'all before he continues.
So I think it's different. And in the same way, stable coins among retail have been largely an ex-US phenomenon. And of course, they're coming into the US, but the US already has the benefit of pretty robust payment and banking systems. I think the real opportunity in the US would be tokenizing assets that were previously inaccessible. And I think we're working with regulators to make that possible. I think those are private markets and related real world assets are opportunities that don't exist up until now. So some things need to happen. We need to look at accreditation laws. We also are on a good path with securities tokenization, but that has to continue, and we think we can unlock that opportunity.
Jason's
All
writing
right.
notes.
The next question is from Devin Ryan from Citizens.
Thanks so much. Hi, Vlad. Hi, Jason. Excellent results. Would love to ask one on tokenization, but I'll ask something different here.
Please don't ask the same thing.
Really ramping nicely, 54 million. In June alone, I think it was up 160% year over year, becoming actually a material revenue line item. And historically, we've seen that kind of ramp as capital markets turn back on and IPOs and hard to borrows kind of accelerate. So can you maybe frame out how you're thinking about the opportunity there? Is the book today so much bigger? The IPO market is literally just turning on. So it seemed like there's potential acceleration there. So is that June number a jumping off point if IPOs continue, or how should we think about that?
Yeah, great question. June was a record, and July is equally as strong, if not stronger. There are definitely strong market backdrops. First of all, great job by our securities lending desk. I thought the team did a really nice job. We've been onboarding a lot of customers. Customers have been adding a lot of assets into our fully paid program. At the same time, our margin book is growing, and that creates inventory for the sec lending desk as well. With the market backdrop, what I'd say is that there are a handful of hard to borrows that had attractive returns in the quarter as well. So that continued into July, as I mentioned. We'll have to see, how that goes, for the rest of the quarter and beyond. But I really love the strong inputs of adding customers, a growing book, adding assets into the fully paid program as well.
All right. Our next question.
All right, let's not get to the next question. That's 3 questions and out. It's 18 minutes in. Look, guys, hit the subscribe button, hit the like button if you like this kind of content, and please share this with somebody that this could help. The community is actually really growing. I started putting the Discord link into the information for the description of the videos. So you could even ask to join the Discord there. But I love you guys. Good night. And I hope you took something away that was really good from this video.